Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Monday, July 24th, and then we'll see how things look for Tuesday, July 25th. Kind of a slow day as the market awaits a lot of information yet to be released this coming week. Let's go back and talk about what happened. The NASDAQ 100 did not fall apart like a lot of people thought it was going to. There was the rebalancing that happened, and I thought, oh my gosh, the bigger companies, they're going to dive. Well, it got replaced by the smaller companies being purchased, and it kind of ended up being a non-event. We're still wondering, the convergence of some of these negative signals that we've been watching, is that going to suggest that we'll have a short-term pullback? They're going away a little bit. We're not really seeing much of a pullback, but that can change at any time. The positive scenario that the market has developed, that still continues. The idea that we'll have a soft landing without going into a recession, that the Fed is almost done raising interest rates, and that looking forward, earnings growth still looks positive. On a short-term basis, though, we have a lot of extreme positive readings suggesting that we're overbought. We have our moving average study, the Williams percent R, the CCI 14 and 20, the standard deviations chart, and the stochastics. Intermediate term, we also have a lot of extreme positive readings, the rate of change going back 50 periods, the PMO studies, the oscillators, not so much the ones that we watch every day. It's the NASDAQ 100 that we're watching the most. The Sean Trend Meter, and then the bullish percent index for the S&P 500, as well as the NASDAQ 100. On a long-term basis, we still have the 150 and 200 period moving averages that are getting extreme positive. The dollar was up and interest rates were up. Usually both of these would give some headwinds to stocks. Didn't seem to have that much of an impact on Monday. All of the yield curves that we follow remain inverted. Sentiment is still extreme. There's a lot of exuberance out there right now. We're at 83 where we had been at 81. Our trend is positive, but the green line's still coming down, even with the up day, but it's coming down from an extreme positive reading. The ADX itself is also kind of getting extreme, but it's still above its moving average, so we are in a trending environment and we default to the positive. The bias continues to be positive and the momentum is also positive. The economic reports that came out, not real big ones. We had the S&P Global U.S. Manufacturing PMI, the preliminary reading. It came in at 49. Last time it was at 46.3. And then the services PMI came in with the preliminary reading at 52.4. Last time it was at 54.4. Here's the intraday chart. We did have a higher open. We immediately went above R1. Didn't quite make it up to R2 yet. We came back down to the daily pivot, and then we pretty much chopped our way higher, eventually making it up a little bit above R2. We saw some later day selling, and then right near the close, some more buying came in to close us just a little bit above R1. Here's the growth to value ratio. This was actually kind of positive, even though growth didn't have all that great of a day. We were above the dashed line and we closed positive, so that's showing a little bit of improvement. Looking at the condition of our trend, here's the ADX, which is the black line. It's getting near 40, but it's still above the moving average. The green line is on top, but it is coming down. So it's giving us a little bit of mixed signals, but we still would default to the positive. Here's a short-term version of that same chart showing how we're still above the moving average, but rolling over a little bit. The green line is still on top, but it is also declining. The ADX is still above 40, suggesting an overbought condition. Here's the daily chart where we tried to come up to the underside of this trend line, came back down. Now we're trying to figure out, can we go back up from here or will we see more weakness? On the bottom, you see where volume really dropped to below average. Here's the Dow theory chart we've been watching. The Dow is still doing quite well, even though we turned down with the transports, but they're still breaking out. It's kind of a loose confirmation of each other. The utilities, which had a good day on Friday, ticked down just a little bit, and that gave a bit of support to the S&P when they ticked lower. We're also watching the 61.8% retracement level for the NASDAQ. We're still above that level. If we fall, will this level provide support, or are we going to be able to bounce up off of this? We're also watching the NASDAQ 100 where we came up to the R2 level. That was overhead resistance. We fell back down. We also dropped below R1. However, we're still above the August 2022 highs. If we continue to fall, will this provide support and then be able to bounce up off of that? That would turn things back more positive. or if we fall down below this, that's going to turn things more negative. We're also keeping an eye on the FANG index, which went and set a new all-time high. It since has dropped back. It was up on Monday, but it is below the recent all-time high that it hit. Then we're keeping an eye on the NASDAQ 100. Originally, we saw a negative divergence where the NDX was making a higher high, but the PPO, which measures momentum, was making a lower high. Now we're seeing the PPO actually starting to cross over negative, so we're keeping an eye on this as well. Longer term, we're watching the S&P 500 weekly chart. We're just barely above this resistance level. Can we stay above that level, or are we going to fall down below this? We're also watching the NASDAQ 100 weekly resistance level. We're just a little bit above that right now. Can we break through and keep going to the upside, or are we going to fall down below this and show some more weakness? The NASDAQ 100 to Dow ratio, we're also at a high level, even though it ticked down slightly on Monday. Other times when we got to this level, this produced some real problems for the market. We'll have to see if it's going to play out the same way this time. So our outlook for Tuesday, there will be policy meetings for the Fed on Wednesday, and then the European Central Bank on Thursday and the Bank of Japan on Friday. There's a lot of influential reports that will be coming out this week as far as earnings are concerned, specifically Google, Microsoft, and Meta. The technicals are still positive, and instead of suggesting that we're seeing a short-term pullback, I've just switched this back to being more overbought. As far as the economic reports, we'll get the FHFA Housing Price Index, the S&P Case-Shiller Home Price Index, and consumer confidence. We're keeping an eye on the geopolitical events, but the market is completely fixated on inflation and interest rates. Here's the updated economic calendar so far for the week. Looking at the Stock Traders Almanac statistics, we are now in the week after options expiration. It's 50-50 whether we're up or down. For July 25th, we're positive for the Dow, but we're neutral to positive for the S&P and the NASDAQ, so a little bit more positive. You can see that more in this next chart. We're on the 16th trading day of the month, where we do see some advances typically. We might get a couple of good up days, but then later in the month, historically, we often see some weakness. We're also watching this for the NASDAQ. We're in the middle part of July and then starting to come back down. We're still wondering if that's going to develop. So our scenarios, can't really go with the down one right now. Our technicals are still quite positive, but we are overbought, but we don't have any chart confirmation that we've really turned negative yet. Hard to go with the up one, but if we were to default to a side, it would be to the upside, but we are overbought. We can't go with the sideways trend right now because our ADX, both our short and regular chart, are showing that we're in a strong trending environment. So the warning signs, we're still wondering if there's a convergence of these short-term bearish signals. They're kind of weakening right now, so they're not as strong as they had been. The longer-term trend signals that we've been watching on the weekly chart, are they signaling a top? It's going to take some time for that to play out. We're coming into a seasonally and historically weak time of the month. The next few days historically are okay, but it's towards the end of July where it looks more weak. The oscillators that we watch, they're holding up okay. It's the NASDAQ 100 oscillator that we're most concerned about. The VIX is still showing that there's not a lot of fear. The cumulative new highs and new lows for the NASDAQ are showing weakness, even though it's turning up slightly. And we're still above the 3-month yield that we were at back in 2007, right before the great financial crisis occurred. S&P 500 growth is weakening, but it's still in an overall uptrend, and we are now coming into the thick of earnings season. The positive signs, I went over this in the weekly video. We have seasonality and setups that remain in the background, and those are positive. The long-term daily special K chart is positive. We're seeing some improvement with the weekly chart, but it's still negative. The long-term equity put-call ratio continues to be positive. The S&P is above the downtrend channel upper line. I haven't been showing that chart because we're far away from that line. We're still in a risk-on posture, even though that took a bit of a hit on Monday. Lower price levels, we haven't really tested these too much yet, but so far they are providing support. If we start to fall, we'll have to see, are those areas going to hold? The S&P is outperforming utilities. The NASDAQ and NASDAQ 100 are still breaking out, but they're still declining after hitting pivot overhead resistance. We're looking at the NASDAQ 100 for that weekly chart. The staples to S&P 500 ratio is declining. And the Russell 2000 as well as the S&P Small Cap Index and also the mid caps have generated recent golden crosses, and small and mid cap growth continues to be positive even though mid cap growth took a bit of a hit on Monday. The Copic curve has generated a buy signal. So our conclusion, the S&P remains positive, but now we're more back to just being overbought. On a short-term basis and an intermediate-term basis, we're looking the same, where we still remain positive in the long term. Thank you. Please feel free to check out the full-length video. Have a great day, and I will talk to you in the next video.